Good afternoon and welcome back everyone to the Money Control live stream. Well, if you're feeling a little nauseous after that, I will not blame you. It has been a roller coaster ride on the Wall Street today, Santo. The Nifty and Sensex, if you look at them, they've been oscillating between gains and losses throughout the day. Hopefully, at this point of time, it looks like we might just scrape through with, a positive close on the market. But you cannot tell. At this point of time, anything can happen in the next half an hour. Overall, if you look at the global setup also, it's been quite negative. The US stock futures also turned into negative after starting off the day on a positive territory. European indices are sort of mixed and Asian markets are also sort of mixed by the end of close of trade. So clearly, Santo, it seems like very volatile times as we predicted in the morning.
Well, more than that, I think the Indian markets are in a zone of their own.
Yeah.
They just seem to be ignoring all global cues. After the correction, steep fall seen in the last couple of days, one would think that maybe bulls would get a little cautious, but that certainly does not seem to be the case. And once again, the time-tested buy-on-dip strategy seems to be working well. So you had 2 days of sharp fall, and today once again
is back.
Yeah, indeed. So good comeback again by the bulls today, but at the same time, you will need to be a little cautious because the same strategy won't always work like it has done in the past. Clearly, the global mood has changed quite a bit. You're seeing clear signs of slowdown in almost all the major economies of the world, be they Eurozone, US or China.
Well, Santo, in conditions like these, one man whose word I really, catch hold of every time is Rohit Srivastava, the Elliott Wave, the famous strategist, and he, had done an interview with Money Control earlier today where he suggested that 18,125 would probably be the top for this rally. Now, generally, you would take plus minus 200, 300 points. And if you look at it, then 17,946 is where we topped out, in this rally from 15,180. I'm a little fearful whether he might end up being right once more because he has been getting a lot of the calls right over the past 6 to 7 months. So clearly, I think, Santo, it seems like at this point of time, investors are a little iffy which way the market will swing.
So what is his prediction for on the downside?
So I don't know what he has predicted at this point of time. Probably there could be the lower of the previous low that we know. But at this point of time, as far as the top is concerned, he feels that 18,125 could be the magic number for the bears out there, because probably after that we could see another, pull back or pull down in the market, because he at this point of time doesn't believe that this is the start of a new bull market.
Well, that said, also valuations are not very supportive at this point in time. You've had a decent set of numbers, but what probably most investors were relieved at was that the numbers were not as bad as most people were fearing at the beginning of the earnings season. That said, still you've seen more downgrades than upgrades during the season gone by.
That is true. That is
I think clearly there is cause for concern at this caution at this point in time.
Yeah, and I think, Santo, the only thing would be that probably the festive season, that is upcoming over the next 1.5 to 2 months could lift the market. We would all want to have a market at record high when we reach the Diwali trading session by October. But that said, let's now move on to some of the other stocks that were quite buzzing in trade today, and there were quite a few of them, Santo. Starting off with the shocker that you have dropped on me.
Yes, CarTrade Technology is the stock. Now, been a big underperformer right from the time it got listed about a year back. A steep fall, leaving many investors disappointed. But over the last few months, again, now the stock appears to be stabilizing, which is also an indication perhaps that now all the pessimism is currently
so what
reflecting.
Are you saying?
So there were some concerns still about a few days back. That was the ending of the lock-in period, which led many to believe that probably you could see one round of heavy selling,
like a Zomato.
Exactly.
Yeah.
But that has not happened, which also partly means that a lot of investors would have got out earlier any which ways, because the CarTrade IPO itself was a completely offer for sale.
Yeah.
So most of the investors who wanted to sell would have anyway got out. With that apart, now some of the brokerages have turned positive on CarTech.
And have you too?
Well, I would say that this looks like a strategic bet at this point in time, not so much a long-term bet.
I think I'll have tears in my eyes because I've convinced Santo that CarTrade Tech is actually a good bet after so many months of trying.
Well, The first quarter numbers were again better than expected. The top line did not grow as much as expected. However, the company was able to control costs, and that led to their reporting a small profit. Now, the revival in the auto sector in general is good news for companies like CarTrade as well. That's also because while the perception is that it's largely a used car player, CarTrade in fact is an overall multi-channel platform which actually connects all the stakeholders across the auto sector, starting from buyers of used cars, new cars, vehicle makers, insurance companies, car dealerships, and the work. So, any improvement in sentiment for the auto sector clearly would benefit a company like CarTrade also. And the management was on the channel earlier this week and said that the first quarter typically is quite sluggish for the company, but things start picking up from the second half itself. And already you've seen the stock price stabilize a bit. Maybe there could be some bargain buying going on at this point.
Well, Santo, I take your point thoroughly. Of course, this is one stock that I've also been talking about, and clearly there are a lot of positives as far as CarTrade is concerned, especially when you take into account the valuation as well, which have become extremely cheap given the sort of correction that the stock has taken ever since its debut last year. But I think for me, probably the near term is a little challenging, largely because of the fact that US bond yields have started rising again. You again have fears of a very aggressive Fed rate hike going into the end of this year, and that generally tends to be a negative for a new age technology company like CarTrade. I think so. Therefore, I would not be surprised if there is a bit of a moderation in the stock's performance going ahead in the coming months. And overall also we have seen this trend with Indian newish tech stocks, wherein they tend to follow very closely what is happening with the US technology stocks out there, and we have seen quite a bit of selling in US tech stocks over the past two sessions, and I just fear that if that continues, then probably that could weigh on sentiment for a stock like CarTrade Tech. Well, Santo, one stock that is on my radar is actually from the banking space. But this has been a stock that has been butchered and battered for the past 1.5 years, and rightly so, given the asset quality concerns as well as the management concerns around the lender. But RBL Bank, clearly, it seems like the market is smelling a turnaround story here, Santo. And if you look at the stock performance recently and even today, it has been quite good. It has given decent amount of returns to investors already. Now, why the stock came into focus today is because Emkay Global had hosted the lender's management, and what Emkay derived out of that, I think, is something that will please a lot of investors who have been worried about RBL Bank's gung-ho approach to growth without caring much about asset quality, and that is what got them in the into troubled waters over the past 1.5 years. Now, MK says that the bank and the new management are going to adopt a more calibrated, more sustainable growth approach going ahead. They are not just going to chase growth blindly, and I think that is a very, very good sign as far as the lender is concerned. On top of that, MK believes that the dismal valuations, now MK is valued at about 0.4 times its FY24 book value, which is probably worse than some of the worst PSU banks out there. So clearly, the market had no faith over the past few years, and MK believes that the market is failing to acknowledge the new strategy that the management is trying to bring on board. And I think that is where there could be an opportunity for a large gain or a multi-bagger gain on the stock, if, of course, the caveat being if the management and the bank can show that they are mending their ways.
Well, the company now the bank deciding to go a bit slow, maybe more out of compulsion rather than out of choice, given that its aggressive strategy probably is what has led to the bank coming into this position. So I would be a little cautious about that. Yes, I take the point on valuations. Clearly, the steep fall in the stock price over the last few months have made valuations a little compelling. Though now we've already seen one round of rebound. Its stock has bounced more than about close to 30 odd percent in the last couple of months after that initial panic reaction when the change of guard was announced. So some things are now beginning to look up, but there are other difficulties as well. In a rising interest rate, typically it's the banks with access to low cost deposits that stand to gain the most, and there is one point where a bank like RBL will struggle a bit. So it's not completely out of the woods. It's at least the bleeding seems to have stopped for the time being, but does this make an attractive bet at this point? I'm not so sure.
I think, Santo, the way to put it is that this is all incremental optimism at this point of time for RBL Bank. Of course, nobody would probably go, bet their house on the stock at this point of time. Neither should they do that anyway. But I think incrementally, when the company or the lender starts showing positive signs of turnaround, I think investors would start staggering their investment into a bank like RBL Bank.
Well, next stock, TVS Motor. Now, the stock has been on a roll ever since March, and it's rallied more than about 60%. Clearly, a big re-rating underway, and if you look at the price chart, it doesn't look like the re-rating is done. The market has done with the re-rating yet. Now, according to Jefferies, one important trigger, one thing which is now in favor of the stock at this point is that its EBITDA per vehicle that has improved considerably over the last 4-5 years. Earlier, it used to be at a huge discount to its rivals. So, it was making about 2,400 per vehicle, which is almost 70% less than what Bajaj and Hero MotoCorp were making. But now, it's making close to about 6,400. So, it has managed to narrow that gap quite a bit. Besides that, TVS Motors is steadily cementing its position in the EV segment. It's moved up to number 3 position and has a 14% market share. So, quite a few things looking in favor of TVS Motor at this point in time, CJ.
Yeah, I think, Santo, of course, as far as the EBITDA is concerned, the improvement in EBITDA per vehicle is concerned, I think a lot of it is also been helped by the fact that there has been a lot of price hikes that have been taken by TVS, not only TVS, but of course the entire auto pack in general. But I think if I look at it at this point of time, yes, a good amount of re-rating has happened, but what now from here on? And when I look at the demand scenario, not only for TVS Motor, but for the entire two-wheeler pack, I think there are still a lot of question marks to be answered. If you look at some of the retail data that has been coming out, it's not really been pointing to a very great picture. Entry-level segment is something that has really been suffering. At this point of time, we are seeing that in a lot of the management commentary as well as a lot of the industry commentary as well. And after a 52% rally almost in 2022, I mean, you talk about 60% from March and then 52% from Jan. I think it seems that the market probably has done the first leg of re-rating. And now from here on, it will be more about delivery and therefore, the fresh triggers that could come in for the stock in terms of earnings performance. So we will have to wait and watch. I think going whole hog right now on the stock would be a little careless. Maybe you could wait and watch and see how the setup develops over the coming quarters.
Well, definitely, yes. The run-up has been pretty steep, so I do take that. So that which means that maybe there could be some consolidation probably before
Possibly,
you see.
yes.
The other thing I would say in its defense is that more than entry level, it's a premium. It's more stronger in the premium segment, and that's where probably it's getting hurt by the chip shortages.
Absolutely, I think that is, and recent, just I think earlier today only there was a Bloomberg report suggesting that chip production may slow down even further because of the threat of global recession, and I think that is probably bad news for a lot of Indian automobile makers, because here even they are betting on demand to be strong, while globally chip makers are seeing a slowdown in demand and therefore cutting back on their production. So it will be a very interesting scenario how that picture also develops in the coming months and quarters. Well, the last stock on my radar today is Devyani International. The stock, of course, was in news today because it fell quite sharply after a large block trade wherein a private equity investor has sold some of its stake in the company. Now, I think clearly this has to be an opportunity for a lot of bargain hunters out there, given the sort of growth outlook that Devyani International has. The Q1 earnings were quite spectacular from the company, and the management's commentary also, Santo, was quite rosy. So I think such a correction at this point of time, when there was very difficult to find an entry into the stock, will clearly give a lot of bargain hunters out there a good opportunity. Overall, of course, the outlook for the stock or the company remains quite strong in a very, very growing market, a market that is still quite underpenetrated and still growing quite strongly, in general. So I think a good opportunity, probably a lot of people out there will be taking advantage of it.
Well, hard to argue against the stock at this point, given its spectacular June quarter numbers. A huge jump in sequential jump in both top line as well as its profit, and most importantly, it has managed to retain margin also. The margins have been quite steady over the last 3 quarters, between 25% to about 23%. So that speaks quite well. So there were concerns in general across the fast food segment that they would be hurt by inflationary pressures, but at least Devyani International does not seem to be showing any such signs of that, and that also leads me to think that probably this could be a brief blip, after which you will see the stock price recovering again. And last stock on my watch list this afternoon is Honeywell Automation. Again, a strong rally in the stock over the last 3 months. It's up by close to about 40%. Antique brokerage has taken a positive view on the stock, and according to Antique, manufacturing over the next decade will be driven by industrial software automation, and that is two key strength areas, strong points of Honeywell Automation. Besides that, cyber security is also being seen as a major window of opportunity for Honeywell Automation. The company has said that demand outlook is pretty strong, but at the same time supply constraints is hurting it to some extent. Besides, there is also the opportunity of outsourcing to its own parent, which has been pretty strong. So, all these factors I think put Honeywell Automation in a sweet spot at this point.
Yeah, clearly, Santo, I don't think I can disagree with that, given the fact that not only the Indian subsidiary but even the international parent also has been performing quite well overall. They are taking advantage of the shift that we are seeing in industrial production with the automation levels continue to rising. So clearly, this is one stock that a lot of HNIs also, as far as I'm aware, are quite bullish about, and they have been taking a bit of position in the stock over the past few months, especially the fact that earlier in the year the stock had seen a decent amount of correction, and that allowed a reasonable entry point in terms of valuation to a lot of investors. So probably one stock that people would be keeping their eye out on for the rest of the year as well.
Well, CJ, so let's quickly take a look at the market.
Yes,
the
Santo.
recovery is pretty much intact. The Sensex is holding above the 59,000 mark, and been quite a good rebound from the
yeah. I
day's
mean,
low.
we are on the Nifty. If you look at it, we are comfortably above the 17,500 levels. So clearly, the bulls have been able to defend that level at least for the time being. And if you look at the sectoral distribution as well, barring the IT sector, almost every other sector right now is in the green. So it has been a very spectacular comeback in the market after the sort of almost 80 to 90 point cut that we have seen earlier in the day. And I think if you stand to look at the broader market as well, the Nifty small cap is really rip roaring at this point of time. The Nifty small cap 100 index is higher by about 1.1%, and even the Nifty mid cap also is doing decently, higher by about 1.2%. So clearly the action is in the broader market.
Well, and with that, what is it that we need to keep an eye out for? CJ?
Well, Santo, one data point that we should probably be watching out for is the July home sales data that will be coming out in the US later in the evening. And apart from that, of course, the Fed member, Neil Kashkari, he will be talking about giving a speech later in the evening. He'll be talking about interest rates, inflation and whatnot. So clearly another Fed member that will be speaking on those issues. And we have known that Fed speak over the past 1 week has been moving the market ahead of the Jackson Hole summit that starts later this week. So very, very crucial events for the market to look out for.
Well, thanks for those, CJ. And with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again tomorrow morning at 9 a.m. Till then, have a great day.